want to introduce Matthew. Where is he? Where do we got Marcus Daley? He's coming up. Marcus Daley is a right proper degen. There we go. Thank you, man. Mike W on this. You good?
I think I'm good. Can you guys hear me all right? All right, good. All right, cool.
Not of life or death or nothingness, but of wastiness I had never been.
All right. So with Scott, we're now going to talk about credit unions. I know it doesn't sound as exciting, but that's all right. We got some cool stuff to talk about. But what I want to start with is setting a little bit of context, because I'm sure everybody's wondering, why is a credit union sponsoring a crypto event? So I'd like to paint a little bit of a picture for you to help describe why that's the case. And let me start first with the executive team that's involved at Mountain America. You've got Sterling, you've got Chad, you've got Nathan and myself. All of us have been involved with digital assets. Some of us have dabbled, some of us are all in, like literally entire net wealth in digital assets. And so the reason why we are dabbling or all in is because we believe digital assets are the way forward. They are a critical part of humanity's future and something that we need to pay very close attention to. Let me tell you a little bit about myself. I'm a CTO. I've been a CTO for a variety of different startups, Fortune 500 companies, been a technologist my whole life. And so for me, crypto was something that was natural. I started in 2017, maybe a little bit late by some standards, but got deeply involved and continue to be involved today. A little bit about Mountain America. It's a federally chartered credit union. We have branches in Montana, Arizona, Nevada, Utah, Idaho, New Mexico, and continue to expand. About $15 billion in assets and growing very, very rapidly. And most of those assets are in the form of savings and loans. Now, one of the things we started asking ourselves was, what if we were to merge TradFi and DeFi and turn that into something that worked together? What would it look like if our services were offered in Web3? And as we started brainstorming about that, a lot of questions came out and a lot of ideas came out. What would be the right thing for our members? What kind of services would they appreciate most? And we thought for sure, probably at least at the base layer, the need for digital assets and physical assets to get on the same playing field was crucial. But let me give you a few statistics just to kind of highlight what's happening, because we see these things, and this is obviously influencing how we're brainstorming about where we're going as a credit union. One of those is today we've got about 300 million crypto holders around the globe. And by the way, once you hit about 1 billion people holding crypto, you've kind of tipped over into mass adoption. This is the way that it worked with the internet. And as you all probably know, crypto is being adopted at a much faster pace than the internet was at the same time in its life cycle. So we're seeing mass adoption. Now let's narrow a little bit down into North America, in fact into the US specifically. About 5.5% of people in the US do not engage with a bank at all. We call them unbanked. About 22% are underbanked, and these are people who may do something, small transaction here and there, but are not terribly involved with the bank in any real shape or form. Yet, 90% of the adults throughout the United States have a smartphone, and almost 100% have a cell phone. So they're on digital rails, but they're clearly not using financial services. There's some gap there, right, that needs to be filled. And we see that as an opportunity. So with that in mind, let me tell you a little bit about what we see inside of the credit union now, get even a little bit more local. And this will, I think, help paint the picture of why we see this as such a big opportunity for us specifically. The average age of our members is about 33 years old. They're typically in a family of a dual income. They come from all different industries. There isn't any kind of one specific industry that we focus on. And they are squarely middle class. I mean, we have covered the whole spectrum across all of those, but we cover kind of right down that split down the middle, and it's a perfect group to adopt crypto. And we know this because what we're seeing is every year, tens of millions of dollars come through the credit union and go out into crypto exchanges. So they're using us as an intermediary to transfer money, or fiat, over to crypto exchanges and do what they do. And yet the experience, for those who are serious about it, it kind of sucks. And what sucks about it is, I'm not sure how many of you self-custody your own assets. I'm one of those people who's all in. Let me show you how I custody my own assets. These are my two most popular ledgers, right? I have a lot of these. And just by virtue of the fact that this is a hardware device that I've got to be clicking is crazy, right? Second of all, these are about $100, $200 for one of these hardware wallets. That right there, in and of itself, has priced out a high percentage of the population of the United States, let alone the rest of the world if you want to do crypto properly, right? This is a major problem. And I know Scott didn't talk much about it, but I know he's trying to solve part of that with Giddy. And several other companies are also trying to solve that, but it's a huge issue, right? The user experience needs to be fixed. But it's not unlike the 90s. And as you can see, I'm a graybeard, okay? You maybe wonder, how am I keeping up? Well, I'm somebody who's a technologist. So I was a programmer with Web 1, programmer with Web 2, and now I'm a programmer with Web 3. But for me, back in the 90s, I had to care about the keys that I was using for HTTPS. I had to care about my TCP IP stack, and I had to load that separately. And some of you here may remember the only way you could have a serious chat back in the 90s online was through IRC. You had a telnet, get in there and have a serious conversation, very different than what you experience today. Or if you wanted to have an encrypted conversation with somebody, it was going to be a war crime, because any kind of encryption was viewed as a war crime until much later, actually, in the genesis of the internet. And so you had to get something called the Clipper chip. You should Google this if you don't know what the Clipper chip is. It's ridiculous, right? But you had to have it attached to your computer to be able to do encryption. You had to get forms from the government to be able to get approval for you to be able to export those keys and communicate externally. So it's not unlike what you see today with crypto. This is a fractal. Things have a tendency to repeat themselves. In fact, many of a few of the legislators that were so anti-encryption are still legislating today. Now, naturally, many of them have learned and grown just like we all do, but it's not much different from then to now, just a different set of technologies, right? So maybe now let's hone in on some of the challenges with financial services, right? We've solved many of these issues with browsers. You load the browser, you don't care what keys you use. It's a very good user experience. But in financial services, that's not always true. For somebody who's not a US citizen, an ITIN, somebody who has an individual taxpayer ID, it's very hard for you to be able to get banking services, right? The system is somewhat biased against you. If you're somebody of color, it is very hard sometimes to get a loan. Human-to-human interaction automatically introduces biases and makes it difficult to be able to get served. Yet we have a strategy to expand our branches as wide as possible. We continue to put up new branches because we believe that human-to-human interaction is key to being able to enable the right kind of financial services that people want, because people need advice. They need somebody to talk to, right? But there are challenges with that kind of an interaction. In fact, 15 to 20% of our population, of our members, are at or below the poverty line. And for those folks, the fees alone prevent them from being able to get access to those services. They might have to take a loan out to pay the fees, right? So these are real challenges that are real people. And if you're a small business owner and you try to get a loan, especially from a bank, and by the way, I want to be clear, we are not a bank, right? We are a cooperative, which means we are not for profit. If you try to go to a bank and get a loan, they will often turn you down because you are not deemed to be profitable as a business. We are the #1 small business loan originator in the state because we're not profitable, we don't care, we're trying to enable the members, right? Yeah, very important. So let's talk about member enablement, right? So you're starting to see now that user interface that I was describing that's problematic with these ledgers I have here in my pocket or other things. I'm not sure how many of you heard about the Robinhood 3 new app that's coming out. You know, that's basically this convergence of what I would call Web 2 and Web 3 merging together. They're now going from custodial to non-custodial with assets. That's pretty cool. The new Coinbase app, or actually the existing Coinbase app, from what I understand, is adding proper Web3 security where you've got a shared key. But again, those are your keys. They just backstop you. And you're going to see other exchanges that are going to follow. So now you're starting to see that conversion a good way from a user experience perspective. You can still be on MetaMask all the time. That's what I use. But for many people, those will be the right kinds of places where they're going to want to interact. But you might ask yourself, why then as a credit union don't we do that? And that's actually what we've been asking, right? Well, the big challenge, and by the way, I want to be clear, it's not because we see crypto as a threat. The reason why, no, seriously, it's not. The issue is the regulation. Unfortunately, the regulation in the United States specifically is not clear. It is murky. Now, we are very fortunate in the credit union space, where the regulator that we adhere to, again, is a nationally accredited, federally accredited credit union, is the NCUA. NCUA has been a fantastic regulator for us, and I was actually talking to the vice chairman yesterday, and it was very timely. They issued a new letter yesterday, right before the conference, which I was really grateful for, that clarified how we might be able to use, or how we can use, DLT or blockchain technology to custody and work with members to be able to help satisfy their needs. That was a huge clarification for us. So you're starting to see evolution, but regulation is way behind where we need to be. And unfortunately, the only place where the regulation, not having regulation is still a benefit, is in the retail space, as all of you and me and myself as individuals, but that only goes so far. We need to be able to onboard institutions, and we need institutions to be able to play, right? And so that's the big challenge that we have as a credit union, is the lack of clarity. In fact, let me give you an example. Many of you probably have gone to jazz games, gotten an NFT. For many people, they have no idea what to do with that NFT. Why can't they take that NFT, send it over to the credit union, and custody it in a safe deposit box? Just so happens that's all digital, right? But they should do that, and then maybe come back 10 years later, pull it out when it's worth a lot, and sell it, and not have to worry about all that security and their hardware keys and all those things that they might have to be worried about. For the vast majority of people, that's what they want. Or what if you have tokens that you want to earn yield on, but you want to deposit them with the credit union? If you have any kind of a stable coin, or maybe some other coin or token that you want to earn yield on, not UST, that you might want to, right, something that's a little more sustainable, that you want to earn yield on, why not deposit it with the credit union and allow the credit union to work with you on that, to help maybe even audit and rate some of those protocols before you use them? What if you wanted to get a loan using your digital assets as the collateral? What if you wanted your credit score to include your digital assets and what you do in TradFi, right? To me, those are good things, because for many of us, if you want to look at my credit score, look, guys, I have put all of my net worth on chain, right? And for me to be able to get a credit score, you really need to be able to see what I'm doing on chain for that to be legitimate, right? And I think that this is important for the comprehensive view of the individual. If we're going to have under-collateralized loans, that's the way the system works. So let's go back to the underserved just real quick, because we do serve the underserved. So digital assets represent a huge opportunity for people who today can't afford to be able to participate. It doesn't care what color of skin you have. It does not care about your demographic. The price is the price. The code determines whether or not you can or you can't buy. Smart contracts for loan agreements, why don't we have those? That way there's no bias. And by the way, it should be open source code, so that if you see that, because sometimes you can't actually introduce bias into the code, so that actually the member can look at that and say, hey, why don't you tweak this so it doesn't have that form of bias? We should be able to have that, right? Or what if you wanted to have a loan for less than $100? It's called microfinancing. Almost impossible to do in the United States, because you pay more in fees. You have to take a loan out to pay the fees to get the loan, right? Because there's too many intermediaries to make that happen. But for many people, that's the most that they can afford, but they need that at the time. Microfinancing is enabled through crypto. And by the way, the payment for that could be over multiple years. What about micropayments? Pennies a week to help pay for that loan. Again, you get dinged with fees so much, you can't do micropayments, right? But yet, finally, now we have USDC payments being enabled through Stripe. We have USDC payments being enabled through the Coinbase debit card. You have the Strike network, which uses the Lightning Network to be able to use Bitcoin payments. And with their tie-up with NCR and Shopify, that's a huge deal. So you're starting to see some of this occur, which is going to eliminate those intermediaries and allow for streaming payments, micropayments, among others. And then one area which we don't talk a whole lot about, and why we're so jazzed about digital assets, is not just about money, but it's also about governance. If you don't mind, just raise of hand, how many of you today are members of a credit union? It's not something to be embarrassed about. We're not a bank. Okay? Do you both? Yeah? Okay. What's that? Yeah, I know. Sometimes there's limits. No, I know. But look, it's certainly better than a place where, for example, and we're talking about governance now, where you don't have any ownership stake, right? The nice thing is, as a credit union, you are a part owner. And wouldn't it be nice if you could digitally participate in that process? Even better, right, by the way, would be if you could participate and prove that you're a human, but they wouldn't have to know anything more about you. Therefore, the bias is out. If you make a proposal, they're not going to judge it based on who you are. They're going to judge it based on the proposal.
So this is not Cryptopia, it's Utopia.
Utopia, yes, thank you. I like it. The ability to keep your information private is a new innovation that's coming out now and crucial, I think, for the success of Web3. Why not be able to direct your funds where you want those funds to be directed? You are a liquidity provider. And why not be able to see all of the transactions that occur on the digital ledger that the credit union uses, just as much as you can today on any one of the blockchains that are out there. And the reason why this is possible, why can I talk about it right now? Why can we brainstorm about this? Because we don't have a profit agenda. So we're here just to serve, right? We have nothing to hide. So just in closing real quick, I wanted to mention, look, we expect that the innovation in this space is going to move fast. That it's going to be just like it was in the 90s, where today if you saw a 1990s website like GeoCities and then you compare it to what we have today, it's quite a bit different, right? So what we need your help with is, we have a booth outside. If you can go out there and share your ideas of things we can offer, that it's going to be durable, that it's going to last 10, 20, 30 years. That's what we're looking for. We're on a listening tour right now to understand what those are. We need your help. We want to participate. We want to be able to be in that place between TradFi and DeFi for those who need it. And by the way, everybody should be able to go straight into DeFi and not make use of our services if they want to. That's perfectly fine. But for those who want them, we want to be able to participate. But we want to offer services that are going to be around for the next 30 years. So please provide us your feedback, right? And remember, we're a not-for-profit. We serve the underserved, and we do whatever the members ask us to do because they're an owner of the institution. So with that, we've got a video that asks some questions that we'd love to hear answers to. If you could go out to the booth and give us those answers, okay? Thank you.